Hey there, future Wall Street wizards. Ever dreamed of making your money grow faster than bamboo in springtime? Well, buckle up because we're diving headfirst into the exhilarating world of the stock market. It might seem like a wild jungle out there, but trust me, with a little knowledge, you'll be swinging through these markets like Tarzan in no time. We're talking about the stock market, a place where companies big and small go to raise money and where everyday folks like you and me can invest in their success. It's a whirlwind of numbers, charts, and acronyms. But don't let that intimidate you. Think of the stock market as a giant online marketplace like Amazon or eBay. But instead of buying shoes or gadgets, you're buying tiny pieces of companies. These pieces are called stocks, and they represent ownership in a company. Pretty cool, right? Now, I know what you're thinking. Jim, this all sounds great, but where do I even begin? Don't worry, my friend. I've got your back. Over the next few sections, we'll break down the basics of the stock market so you can start your investing journey with confidence. Get ready to learn, earn, and maybe even have some fun along the way. All right, let's talk stocks. Think of a company like a giant pizza. When you buy stock, you're buying a slice of that pizza. The bigger the slice, the bigger your ownership in the company. Simple, right? There are two main types of stock, common and preferred. Common stock is like your everyday slice of pepperoni pizza. It's the most common type of stock, and it gives you voting rights in the company. You get to have a say in how the company is run. Plus, if the company does well, you might get a piece of the profits in the form of dividends. Dividends are like bonus toppings on your pizza slice. Now, preferred stock is a bit fancier, like a gourmet pizza with exotic toppings. It usually doesn't come with voting rights, but it often pays a higher dividend than common stock. Think of it as getting a bigger slice of the profit pie. Both types of stock have their pros and cons, so it's essential to do your research and figure out which one fits your investment goals. Remember, knowledge is power in the stock market. So why do companies even bother with this whole stock market thing? Well, it all boils down to one thing: money. You see, companies need cash to grow their business, develop new products, or expand into new markets. And sometimes they need more money than they can borrow from a bank. That's where the stock market comes in. By selling shares of stock to the public, companies can raise massive amounts of capital without taking on mountains of debt. It's a win-win situation. Investors get a chance to own a piece of a potentially successful company, and companies get the funding they need to achieve their goals. Think of it like this. Imagine you want to open a lemonade stand, but you need money to buy lemons, sugar, and a fancy lemonade dispenser. You could borrow money from your parents, the bank, but they might charge you interest. Or you could sell shares of your lemonade stand to your friends and family, investors. They give you money, you give them a share of the profits, and everyone's happy. Of course, the real stock market is a bit more complex than a lemonade stand, but the basic principle is the same. Companies need money to grow, and the stock market provides a platform for them to raise that capital from eager investors. It's the ultimate engine of capitalism. Now let's talk about how the stock market actually works. Imagine a giant auction house where millions of people are buying and selling stocks simultaneously. That's the stock market in a nutshell. The price of a stock is determined by supply and demand. When more people want to buy a stock than sell it, high demand, the price goes up. Conversely, when more people want to sell a stock than buy it, low demand, the price goes down. It's like a giant game of tug of war, with investors pulling the price up or down based on their perception of a company's value. But here's the thing, the stock market is an emotional beast. It's influenced not only by cold, hard facts about a company's performance, but also by news headlines, rumors, and even the overall mood of the economy. A single tweet from a CEO or a surprise interest rate hike by the Federal Reserve can send stock prices soaring or plummeting. That's why it's crucial to understand that the stock market is inherently volatile. Prices can fluctuate wildly in the short term, and there's always the risk of losing money. But don't let that scare you off. Over the long term, the stock market has consistently trended upwards, rewarding patient and disciplined investors with substantial returns. Okay, so we've covered the basics of stocks in the stock market, but why should you even care? What's in it for you? Well, my friend, The stock market offers one of the most powerful avenues for building wealth over time. Here's why. Historically, stocks have outperformed other asset classes like bonds and real estate in terms of long-term returns. While there are no guarantees in the market, investing in stocks gives you the potential to grow your money significantly over time. Inflation is the silent killer of wealth. It erodes the purchasing power of your money over time. However, stocks have historically outpaced inflation, helping you maintain the value of your savings. When you buy stock in a company, you're not just buying a piece of paper, you're becoming a part owner of that business. You're investing in their success and sharing in their profits. Of course, investing in stocks is not without risks. But with careful planning, diversification, and a long-term perspective, you can mitigate those risks and unlock the incredible wealth-building potential of the stock market. Ready to dip your toes into the stock market waters? Fantastic! Here are a few simple steps to get you started. 1. First things first, you'll need a trading account with a reputable brokerage firm. This will give you access to the stock market and allow you to buy and sell stocks online or through a broker. 1. Don't just buy any stock you hear about. Take the time to research different companies, understand their business models, and analyze their financial performance. Knowledge is power in the stock market. 1. You don't need a fortune to start investing. Begin with a small amount of money that you're comfortable risking and gradually increase your investments over time. And remember to diversify your portfolio by investing in a variety of stocks across different sectors to spread your risk. Congratulations, my friend! You've just taken your first steps into the exciting world of the stock market. It's a journey filled with potential rewards and, yes, some risks too. But remember, the greatest risk is not taking any risk at all. The stock market is more than just numbers on a screen. It's a reflection of human ingenuity, innovation, and the relentless pursuit of progress. By investing in companies, you're investing in the future, a future where groundbreaking technologies are developed, life-changing products are created, and dreams are turned into realities. So, dream big, invest smart, and never stop learning. The stock market is your oyster. Go out there and make some pearls.